Our members are feeling a pinch. There certainly isn't as much work out there as there was previously, even 6 months ago. With the credit crunch and the lack of lending by banks, members are now seeing that their workload for the future maybe has decreased, and this is causing them some concern.
So what are they doing to adapt to that?
Well, what they're doing is they're taking on different types of work. Instead of people moving property, we're finding that our members now are getting involved with extensions, renovations, loft conversions, that area of work. They're seeing an upturn in that. However, the big property development and the housing developments, that's where the major downturn is.
This would be one of our typical first-time buyer properties that we would have on the market at the moment. New build, full turnkey, 2 bedrooms here, stamp duty paid by the builder.
How well are these properties selling?
At the tail end of last year, we found that the properties were selling very well. We had people who camped out overnight actually to buy them.
But with the downturn in the market, how have they been going?
I think at that point, because the builder had actually been aware that the downturn was occurring and had priced accordingly, we did have that bit of interest that maybe there wasn't in other sites.
So how much did prices come down?
There was probably a drop of approximately 10% at that point in time.
Cutting prices helped to keep sales going at this development in Bangor. But overall across Northern Ireland, the number of homes changing hands has dropped drastically, down at least 50%. Estate agency business has been badly hit.
Coming into the start of this year, in actual fact, things have worsened. Mortgage products are a lot more difficult for the first-time buyers to get their hands on. There's the deposit issue that they need to buy a property now.
I suppose the key question, in a sense, in terms of the estate agency business, how are you able to manage to keep your heads above water with a fall in the number of sales of maybe by 50%?
Well, I think the thing is, Jamie, that, we are in the business of selling houses. And with the sales not being there, the first thing with any business is overheads have to be cut.
So what have you had to do?
Well, we've had to lay staff off.
Fewer houses have been changing hands. But it's not just due to problems facing first-time buyers. Prices are still too high for some would-be purchasers. Others, who could afford the cost, are waiting for further falls in the market. Having said that, a major factor holding back trade is a new conservative approach adopted by banks and other lenders. One developer who's attracted new business by cutting prices is frustrated by the tighter conditions imposed by the lenders.
As we concentrate on first-time buyers, we have reduced prices down to 2005 prices. We have found it very difficult, but we've had to do that.
Have all developers been doing that?
A lot of the developers have, and some of them haven't. The ones who have been cutting the prices have been selling homes.
So if prices are being cut back, then can first-time buyers get into the market?
No, the problem with the first-time buyers is the banks are being very tight on their criteria of lending, and the mortgage companies. And we have been meeting with them and we have said, we have played the game here and we have reduced the prices. Can you try and help the first-time buyers? And we're having great difficulty with them at the moment.
Banks started to get nervous about the housing market months ago. As prices fell, the risk grew that they would lose money through borrowers defaulting. That would be reason alone for caution, but there was another factor. The credit crunch meant they had less money to lend out. Together, these two issues led to the demand for higher charges and bigger deposits.
We've found that over the last 6 to 9 months there has been a general tightening of criteria for mortgages. And in particular around February time, it tightened to such an extent that 100% mortgages weren't available at all.
What size of deposit now would be typically required by the lending institutions?
There are deals out there where 5% deposit is sufficient, but not everyone will fit that criteria, so we're finding that it's generally 10% that is required.
Is any bank or building society looking for more than that?
Yes, there are lending institutions looking for more than that, and locally we have First Trust looking for 20% typically.
We approached all 4 big banks here. Only First Trust was willing to talk to Insight about its lending policies. It agreed it had tightened up its criteria for arranging mortgages.
Would it be fair to say that you seek from the average couple a deposit of around about 20%?
Well, that would be the average. But if you look at First Trust as a responsible lender, basically looks at repayment capacity for all our customers. So really what we're looking at is, can our customer afford to repay? That's what we would be looking at. But you know, we have to be cognizant of the market in terms of what we've talked about previously, the price falls, and therefore you wouldn't want to be lending customers 100% mortgage in the current environment, because you know, you don't want your customer to end up with negative equity going forward.
First Trust says bigger deposits safeguard buyers from negative equity. That's true, but a major plus for the banks is that in a falling market, the more a buyer puts down, the better protected they are from a loss if the house has to be repossessed and sold. Take a house with a 20% deposit. The market would have to fall by around that percentage for the bank's money to be at risk.
Now, it's interesting to hear that you are looking to protect the customer, but in seeking higher deposits, are you also trying to protect your own interests at the bank?
Well, there's always that in terms of looking at the bank, but the reality is, I think, you know, we have to protect our customer as well.
If a first-time buyer does manage to get a mortgage, it could prove expensive. Research by the Bank of England shows that in April, the average interest charged by UK lenders on one typical fixed-rate mortgage was nearly 7%. It's been 10 years since such a mortgage cost more. High interest rates and the insistence on bigger deposits are deterring first-time buyers. Many can't purchase even if they wanted to. Last year, those unable to buy a property outright turned in large numbers to this housing body. Close to 1,000 got their first home by splitting the costs with Northern Ireland co-ownership. Among them, Ashley Shaw. Shortly after the housing market hit a peak last summer, she and her fiancé agreed a relatively big price for this 3-bedroom home in North Belfast.
Okay, we moved in here about 6 months ago. When we first moved in, things were a bit all over the place. Like, the garden was quite overgrown, so we paved it, put some stones down and everything. The kitchen was orange. It's not anymore. We did a bit of work to it to brighten it up and just make it a bit homelier.
It's a lot more spacious than you might imagine from the outside.
It is. From the outside, everything looks quite small, but as you come into it, you can see yourself that it does open up quite a bit.
How much did you pay for this house here in Rosapenna Street?
We paid 169,000 for it.
And what do you think it might be worth now?
I think it would be worth about 140.
So about 30,000 less than you paid?
Yeah, I'd say so.
Does that colour the way you think about this little property?
Well, in a way it does, but at the same time, if we didn't buy it when we did, I don't think we could have got it at all, because we bought it through co-ownership.
And did co-ownership advise you that you might be paying more than the house would prove to be worth?
They didn't really. They sent people out to check for us that it was worth what we were paying, so they just really